looking at what happened in the market yesterday, Aisha, means we saw nearly a percentage of cut coming in, mainly led by the banking pack there. And if you look at the breakup of the banking pack, especially with respect to how the deliveries happened for the banks there, and the kind of and superimpose that with what's happening in the F&O market, you'll get to see that the deliveries were high for banks. There were high delivery volume which happened for private sector banks, but at the same time, there was huge cuts happening in the open interest positions for many of the private sector banks like an SDFC, Kotak and Axis. And that cut was not resulting in a rollover to the next series, which is the August, but it was indeed a cut coming in and the unwinding of positions which was happening. Remember, going into the July earnings season, the expectation of the market was that the private sector banks will come up with good set of numbers. At the beginning of the month, you saw updates coming in from many of the private sector banks about the kind of top line growth that is expected with respect to credit growth. But what the street missed out is the kind of impact that would have happened to the net interest margins there. And as a result of which, the disappointment which came in, you saw an unwinding of positions and and sharp churn coming in from the private sector banks to the public sector banks. Banks like PNB, Canara, Union Bank, SBI were up again yesterday's trade, but at the same time there was a churn which was happening from the private sector to the public sector bank, and that's what the data is suggesting, that going into the earnings season, you have now SBI is one of the big earnings which is expected, and street will now pen its hope on how SBI is going to perform there. And if SBI, in Q4, we saw that SBI was, little short of the street expectations. If Q1 they are able to meet the street expectations, then you see a big push coming into the public sector banks and the move away from private to public sector banks. So that's one clear thing coming out of the data which is there on yesterday's trade, where the private sector banks saw sell-off coming in and public sector banks saw buying interest coming in, and a shift of positions also coming in because of the kind of open interest which was there. But we have Kunal with us. Kunal, yesterday's trade in private versus public, do you think we didn't see the rollovers happening that much for private sectors? It was unwind of positions which was there.
So I think yesterday and the last previous week, the last I think couple of days, we saw that tilt that the private sector banking stocks were showing some signs of fatigue for themselves. But yesterday was one of the clearest day where we saw the PSU banking stocks taking a lead. There were so many of the PSU banking names, the mid-cap ones specifically, which had bounced back about their 200 moving averages. And we are talking of a period for the last, say, 1 month approximately, where the PSU banking stocks had actually underperformed the private sector banking names. So it was a refreshing change. And, it's a natural way of the markets balancing out when you see one sector or, within a sector, one end of the market being a little bit more stressed in terms of the price performance, because yesterday, I think for the, last, I think so many days, for the first time, you saw 3 major large cap private sector banking stocks down by 3, 4, 5 percentage points for themselves. So that put some sort of a pressure or a stress in terms of the Bank Nifty, but that got balanced out with the performance with respect to the PSU banking names. Now, what matters over here is that the first leg of a breakout has happened for the PSU banks, where you've seen these stocks like Bank of India, Canara Bank, PNB, etc. They've managed to come back about their or closer to their long-term moving averages. Now, if they sustain this breakout and if they provide a second leg of a up move, that's where we may attribute that we are looking at not just a temporary flow of money from the privates to the PSU banking names, but more of maybe a permanent one or something which could last for at least another few months.
But Kunal, looking at the kind of breakdown in these stocks yesterday, the private banks that is, particularly the likes of an HDFC, Axis and Kotak, and looking at the high delivery markup as well, does it seem like there is more selling to go before they find some stability?
I would not think so, Aisha, because it's an event-based sell-off. Event-based sell-off lasts for another 2-3 days for the stock price. A major part of the chunk or the impact happens on the first day, or at max the second day for the markets, in case if there is any kind of a further surprise in terms of those events. But once that is behind, you don't see a major or a material impact into the stock price trend. Of course, that doesn't mean that the stock prices may not drift down. But I would believe that the pace of correction which happens post that is a little bit more on the slower or the gradual side. Just to give a context or an example, what happened to Trent almost a couple of weeks back? There was a 5%, 10% gap down move. Then post that, over the next 5 or 6 trading sessions, the stock went through a 0.5% to 1% kind of a gradual corrective wave for itself. So that tells you that the pace of correction drops down. There's counterbalance, rally for the stock price, which we see on an intraday basis. But net, the major damage happens on the first couple of days itself.
And Kunal, from an IT standpoint, that also saw a bit of a pullback yesterday, or maybe more tempered in terms of the move. Is the rotation playing out of IT as well?
Doesn't look like. I think the IT stock is still, IT play is still very much on. In fact, in the second half yesterday, you saw names like HCL Tech, TCS, Tech Mahindra also, if I'm not wrong, which came back to their intraday closing highs. So that sort of gives an inclination or an indication that we are still looking at a point where there is some favoritism towards those select IT names as of now in terms of the overall basket.
Okay, so Kunal, what's the stock-specific strategy for the day?
So I'll go with a buy on Hero MotoCorp. I think for the first time in the last many days, you're seeing the stock coming back into a breakout mode for itself, trading just closer to that 4,900 mark for the stock. So would look at a near-term target of 5,250, stop loss to be kept at 4,750 mark. The second would be a buy on REC Limited. This could be an interesting play because after many days, we've seen those power finance names trying to make a comeback for themselves. REC is something which I would bet at the current levels, targets of 375, stop loss at 348.